The Nigerian equities markets remained in a negative territory as investors resumed bargain hunting on large-cap stocks. Our analysts say they expect mixed sentiments in the coming week. Olamofe Mathew, an analyst at EDC Securities, joins me for a weekly review of the market. Olamofe, thank you for joining us today.
Thank you for having me.
Let's start with your take on market action today. What were investors buying, and what's the most attractive for investors at the moment?
Today investors were more bullish on industrial names and some banking names, likes of Waco was a major mover of market performance today. Market closed slightly positive, 0.09%, largely on gains of Waco. We saw some gains in likes of FBN, saw gains in Wando as well because of the energy. But generally, sentiments has been strong in the market since the start of the week. Week on week, market is just up by 0.91%.
All right, let's talk about some. I was just looking at on the NGX website some earnings forecasts from the likes of Okomo Oil and some downstream players, Total Energies and MRS. Okomo Oil says it expects a revenue of 134.8 billion in the fourth quarter of this year. I wonder if investors are paying any attention to that and how that could move the stock.
So I think generally investors are more into with macroeconomic events, the pressure that stems from elevated prices as well as FX pressure, and that's really impacting on corporates. We've seen the number of that in their H1 results. So beyond revenue numbers, investors are more keen as to how that will translate to better bottom line performance. So these are the things that are really guiding sentiments in the market beyond accretion of revenue. So investors are looking at companies that will be able to survive this hard time in terms of elevated prices and FX pressure, and at the end of the day, deliver value to shareholders.
What about Total Energies forecasting 1.6 billion PAT in Q4, MRS 154 billion in Q4 as well?
I think for Total, we are also quite bullish on Total, but especially on the near-term perspective, not this very immediate term, and that's because we know the removal of subsidy is positive for margins for Total, although there have been some sort of pressure on volume. We've seen that really impacted on volume in their results. But we are hopeful that going into next year and coming years, volume will gradually pick up, and that will be very positive for performance in the near to medium term. So we still have a very optimistic view on Total. We believe that it's going to bounce back. It's going to bounce back. Operational wise, we're going to be very efficient, and we think that that's really going to continue going forward. So the pressure we see is pretty much near term. We think that in the medium term, they will bounce back and be able to deliver value to shareholders.
I'd like to hear you. Right. I'd like to hear your thoughts on, the earnings, at least the last of the earnings that we've seen so far, the numbers, especially some from the banks also. What would you say is a common denominator? Well, let's leave the banks aside because we know that the banks did, their story was different. They had that FX revaluation where we saw, their profits jump. But for the others, what story do the numbers tell you?
I think for banks, like you already mentioned, it's pretty much about valuation gains this year. If you look at their performance, the core performance, there's some sort of pressure. It doesn't really justify the strength of the result we've seen thus far. But the good thing for banks is that the valuation gains would help performance to remain abreast for in the near term, and so it gives a little bit of comfort to shareholders, particularly because the naira keeps losing grounds against the dollar in the FX markets, and that again is optimistic view for banks from a valuation standpoint. I think from what you've said, that's what is pretty much across all banks. Most banks are really riding on valuation gains to deliver value to shareholders at times.
What about the consumer goods, for instance, consumer goods sector? It's been pretty rough, but looking at the year-to-date return for the overall sector, it's very much in the green in terms of return to investors. But for the companies themselves and the story, the facts behind the figures, how they're maneuvering the high inflationary environment, and how they're trying to creatively balance the price increase and keeping the customer at the same time and moving volumes. How do you see them maneuvering the rest of the year?
But I think what to bear in mind is that we've seen initially across all stocks following the beginning of this new administration. That rally has really pushed prices. But now, currently, beyond the likes of Boa Foods and Down Sugar, which have peculiar reasons, the overall consumer space is quite negative. And going forward, we are not really optimistic on consumer names, and more importantly, non-banking names. We think that, like you already mentioned, the negative impact of rising consumer prices, the negative impact of elevated prices will continue to impair on profitability for some of these names. So what we expect going forward is that banking names will be what will keep the market afloat, especially because the revaluation gains will continue through the end of the year and reflecting their full year earnings results. For non-banking names, we are quite pessimistic. We're cautious. We advise an investor to look to position those names whenever they have very good entry. But as of now, I think that's something we should be very cautious of in terms of positioning at a time like this. Yes, there are some names that are quite resilient, but even in their resilience, the pressures are still there, and also cause for the need for caution.
Now, what would you say, I mean, for the best performers this year outside of the banks now, especially those counters that have outperformed the NGX itself? What names come to mind for you, and what have been the key drivers supporting fundamentals of these stocks?
So I think beyond banking for us is also looking at oil and gas names. We believe that our will improve with positive performance for the oil and gas sector. So we are positive on not just banking, but also the oil and gas names. And oil and gas, I'm just looking at the upstreams alone. I think I already mentioned Total. We also bullish on the downstream space like Total. Of course, we've seen that played out in terms of sentiments regarding these names. Just fine here.
Now, for the broader macro economy, as you mentioned earlier, investors keeping their eyes on the broader macro economy. What is the sentiment? We know that this is going to obviously it's market based, which is the focus of this new administration. We've seen some hard decisions being taken around the fuel subsidy, the FX market, etc. But it would appear that investors are still expectant of when it comes to broader reforms still ahead. How bullish are investors regarding those reforms ahead?
Can you say that again, please? I missed you for a second.
Investors have been bullish when it comes to the macroeconomy, especially on the reforms that have been taken so far. But I know the expectations are still high in terms of further reforms that are still ahead that the administration has promised. So how bullish are they on reforms ahead? And are there specific reforms that investors are looking forward to?
I think we've seen a couple of reforms on the monetary and fiscal side of things. And the market really took that positively. But currently, market wants more. I think what people are looking for now is more clarity as to what government intends to do, particularly from the FX standpoint. Although the reforms were quite positive, we've not seen so much in terms of Naira appreciates and the Naira has continued to lose ground against the dollar, and that is really important for businesses in Nigeria. It's going to feed into performance for most corporates, and also reflects in terms of prices for the end users. So market is looking for more clarity as what government intends to do in terms of stabilizing the Naira in the FS market. And in the absence of that, like you already mentioned, we're not seeing so much attraction from foreign portfolio investors playing in Nigerian markets. And that's because they want more clarity. I know the student has mentioned that they intend to clear backlogs on the next 2 weeks. We are waiting to see how that plays out. Okay. And I think in event of that happening, that should in a way improve sentiments in the market and then show some seriousness from the administration that intend to really make lasting reforms in the country.
Well, Olamofe Mathew, thank you for your time today. Thank you for talking to us. Appreciate your time on the show today. Olamofe Mathew, analyst at EDC Securities.